Welcome. In today's video, I'm analyzing credit rating agencies. A credit rating agency rates debtors on the basis of their ability to pay back their interests and loan amount on time and the probability of them defaulting. These agencies also analyze the creditworthiness of the issuers and provide credit rating to organizations. The assessed entities include companies, special purpose entities, state governments, local governmental bodies, non-profit organizations, and even countries. As of now, there are 6 credit rating agencies: CRISIL, ICRA, CARE, SMERA, Fitch, and Brickwork. On the basis of the ratings provided by these agencies, the nature and integral of the loan is determined, which means that higher the credit ratings, lower is the rate of interest offered to the organizations. Next, we'll look at the fundamental ratios and understand the overall health of these companies. So let us move on and look at the ratios of these companies. So in today's video, I'm analyzing companies like CRISIL, ICRA, and CARE ratings. In this video, I'm analyzing only 3 companies, and the results are up to date till June 2019. Let us look at which company's share price is most expensive after we equalize with the face value of 10. CRISIL's current CMP is 1287 rupees, face value is 1, so you adjust it with 10, so the current market price is 12,873. ICRA's adjusted price is 2,623 and CARE's is 538. So the most expensive in terms of adjusted face value is CRISIL. Next is the change in market cap over 1 year, 3 years and 5 years. How these companies have grown in the market over these periods. CRISIL's latest market cap is 9,300 crores. 5 years back it was available at 8,490. So currently it is available very near to where it was 5 years back. 3 years back it increased to 14,000. So from 14,000 3 years back it has dropped to 9,300. So now it is available at a reasonable level where it was approximately around 5 years back. ICRA too has fallen from where it was 3 years back and nearby to where it was available 5 years back. CARE rating has fallen from both 5 and 3 years back market cap of 2,200 and 2,700 CR, and currently it is available at 1,500 CR. Next, let us look at the percentage fall in price from where it was 52 weeks back. CRISIL's price 1 year back was somewhere around 1,675 and it has fallen 23%. So the current MRP is around 1,287. ICRA's shares have fallen from 3,790 to 2,623. That's a 31% fall. And CARE rating has fallen 53% from 1,100 rupees to 538. That's the highest fall in these 3 companies. In this chart we'll look at what is the change in price over 1 year, 5 years and 3 years. This is similar to the chart we had seen for the market cap of the company. CRISIL 52 weeks back has fallen 23%, but from 5 years back the price overall has increased by 10%. So we are getting CRISIL at a gain of 10% from where it was 5 years back. And from 3 years back it has fallen 34%. So this company is available below its 3 years price, or where the price was 3 years back. ICRA has fallen 31% from where it was 1 year back, and it's available at 33% gain from its 5 years low and 35% drop from where it was 3 years back. So again, a good opportunity in the sense that the gain in price is not that much from where it was 5 years back. So approximately you divide 33% by 5. So that was the percentage gain on average. It had increased in price. CARE rating has fallen from all its three price points of 52 weeks, 5 years and 3 years, and it has seen the most fall in its price in all of these companies. Even from 5 years back it has fallen further 30%. In this chart we are looking at the profit earned on the current share price. That is, what is the return generated as profit on the current share price. CRISIL's earning yield was 3.7%. On a price of 1,200, the profit earned in 2019 was 48 rupees. ICRA gave an earnings yield of 3.9%, a low earnings yield, because my benchmark as such is slightly above 5% at least. CARE rating has given a 7.9% yield. That is because the price has fallen to 538 rupees and the earnings per share is still at 42. So that's a high yield in all of these three companies. In this chart we are looking at how many times more we are paying for the earnings of the company in the latest year. That is, how far away the price is compared to the earnings these companies are generating on per share basis. CRISIL's price earning ratio was around 26.8 times. The price was 1,287 and the company's earnings per share was just 48 rupees. That is, we are paying 26.8 times more than the earnings generated by this company in 2019. ICRA price earning was around 25.6 times. We are paying 25.6 times more than the earnings of the company of 102 rupees to buy into this share. Again, very expensive. My benchmark is 25 times price to earnings ratio. CARE rating is available at the lowest price earning multiple of 12.6 times. 538 is the price and the EPS is 42.7. Next, let us look at the price earning that we paid in the previous chart and compare it with its 5 years and 3 years average. That is, the price earning which is available currently, is that justified? CRISIL's current price earning is 26.8 and below where it was trading from 5 years and 3 years. So it's trading at almost half of where it was trading on average in the last 5 years. And even in the last 3 years. ICRA 2 is available at almost 50% to its 5 and 3 years average. Similar is the case for CARE rating, which is available at a 50% discount to its 5 and 3 years averages. So the lower we get, the better it is against its 5 and 3 years averages. In this chart, we are looking at the conversion of profit into cash and how much of that cash was used in buying assets or investing in assets and how much was left over as free cash to be used in the financing activity of the business. I won't explain in detail each ratio now because I've already explained in my past 30 videos. Anyone who is interested in understanding in detail can always refer to those old videos that I have published earlier. To save on time, I'll be explaining in short about each ratio. CRISIL earned 48.2 rupees in 2019 as profit and received 52 rupees in cash. This higher cash which was received could be because of non-cash expenses which have been added back while calculating CFO or cash flow from operations. Out of this 52 rupees of cash earned in 2019, 48 is still left over with the company to be used in the financing activity. ICRA earned 102 rupees as profit per share and received 83.4 rupees in cash. Again, what is happening is, although it has earned 102 rupees, it has not received everything in cash. So there was a shortfall in cash in 2019. But out of this 83.4, entire cash is left over as free to be distributed in the financing activity. Carry rating, again a similar situation, a profit shown of 42 rupees but received only 36.8 rupees in cash and 27.9 rupees left over as free cash. If someone wants to understand in detail or in depth, they can always refer to my old videos in which I have explained in detail about each ratio. In this chart, we are looking at a valuation ratio, current market price to the operating cash flow. Previously, we looked at current market price to the earnings, and this is current market price to the cash ratio. Out of that profit the company has earned, how much was converted into cash? That is very, very important to look at, because finally what we are interested is in the cash that the company has with it and not a paper profit. So in this ratio, we are looking at how many times more or how many times away the price is compared to the cash earnings of 2019. CRISIL entire company was available at 9,300 crores and the cash earned in 2019 was 378. That is a 24.6 times multiple of the cash earnings. Meaning, if someone wanted to earn this entire cash of this company in 2019, they would have to pay 24.6 times more to buy into the company. ICRA, on the other hand, the price to cash multiple is very high at 31.5 times. Here, my benchmark is 25 times or less than the cash earnings of the company. CAD ratings available at 14.6 times multiple. Again, this is due to the huge fall seen in the price of this company. Next valuation metric is the current market price to the free cash flow. Here too, we want to understand how far away the current market cap is compared to its free cash. CRISIL entire market cap was 9,300 and the company's free cash was around 347 crores in 2019. That's a multiple of 26.8 times. Here too, we don't want to pay more than 25 times the free cash. ICRA price to free cash was 31.5 times. Company's free cash was 81 CR against its entire market cap of 2,500 crores. CAD rating, the lowest price to free cash of 19.3 times. So valuation wise, CAD rating seems to be the cheapest one, but not necessarily the best one. So as we look at the growth metrics, the profitability metrics, cash flow conversion, and so on, we will understand why CAD rating has fallen so much. Next valuation ratio is the current market price to book value. This is again a per share based analysis. Here we were trying to understand how many times more are we paying against the book value of the stock. That is the actual shares price as per the company's books or company's records. CRISIL market price was 1,287, but as per the company, the shares actual worth was only 158 rupees. That's a 8.1 times multiple. So to buy into this company, we will have to pay 8.1 times the actual shares price. Now this actual price or book value is calculated by selling all assets, paying all liabilities off, and whatever remains is the net worth or the book value of each share. My price to book value benchmark is 2.5 times or below. ICRA price was 2,623 rupees per share and the company's record showed the shares value to be around 660 rupees per share. That's a 4 times multiple, again a high multiple. Even CAD rating is available at a high multiple of 2.9 times its book value. Next valuation metric is the current market price to sales. Here we are trying to understand how much is the sales compared to its market cap. Is the company managing to generate revenue as good as what its market value is? CRISIL entire market value of the company was 9,300 CR and the company generated 1,700 CR in 2019 as revenue. That's a 5.4 times multiple. So the lower the multiple, the better it is. If the company had managed to generate higher and higher sales against its market cap, that's a good sign. ICRA, again a very high multiple of 7.8 times. The entire company was available at 2,500 CR, against which it managed to generate just 326 CR of revenue in 2019. CAD ratings multiple is also very high at 5.1 times. This valuation metric, that is the product of price earning and price book, was formulated by Graham, and he mentioned that investor should not pay more than 22.5 times the product of price earning and price book. That is the price earning of maximum 15 and price book of maximum 1.5. My benchmark into buying companies is that I should not pay more than 25 times the price earning and 2.5 times the book value. So in this sense, this ratio is more for conservative investor who don't want to pay a very high multiple. CRISIL, a high price earning and a very high price book. Therefore, the product also is very high at 217. Again a negative value. ICRA, a high multiple of 101. Both the price earning and price book are above the benchmark. Similar is the case for CAD rating, where the price earning multiple though low at 12.6, but the price to book is high at 2.9 times. So the multiple is somewhere around 36.7, yet lower than the previous two companies. Next, let us look at the compounded growth in net profit over the last 5 and 3 years. Here we are trying to understand how the profits are growing year on year from 5 years and 3 years back. CRISIL has managed to grow its profit at the rate of 7.4% compounded since last 5 years and 9.9% since last 3 years. So in the recent 3 years, the growth in profit seems to have further increased, so that's a good sign. ICRA too has managed to grow its profit over a period of 5 years at the rate of 11.9%. So that's above my benchmark of 10% growth rate in profits. In fact, in the recent 3 years, it managed to further increase the speed at which it is earning profits to 13.8%. So again, a very good value for both of these years. CAD ratings, a low growth rate in profit since 5 years at just 3.4%, and in the recent 3 years, although it has picked up to 5%, it is still way below the benchmark of 10% growth rate in profits. We can also use averages of the group companies to understand where the growth rate in profit should be approximately, instead of using a standard 10% benchmark. This is a valuation metric, price earning to profit growth rate, to understand whether the price earning multiple we have paid for these companies is that justified. Sometimes a high price earning multiple is not a bad thing if there is a high growth in earnings too. So here we are trying to project the 5 years growth rate in earnings and use that as a benchmark to understand if that price earning multiple we have paid is justified. CRISIL, we paid 26.8 times the earnings, and that earnings was growing since last 5 years at the rate of 7.5%. So we are taking this 7.5% of the past 5 years to project into the future 5 years and see how fast we can recover this multiple we have paid for this company. So the PEG is calculated by dividing the price earning of 26.8 times with the profit growth rate of 5 years of 7.4%. So we get a PEG of 3.6. This PEG is quite high considering that my benchmark is 1.5 or below. ICRA's PEG is 2.2, again a high value. In fact, CAD rating a low multiple, price earning multiple of 12.6 times, but also a very low growth rate in profit of 3.4%. Again, a high PEG of 3.8. So it is not necessary that just because CARE ratings price earning multiple is 12.6 times, this is good value. In fact, if we compare ICRA's 25.6 times multiple, this is much better than buying CARE rating at 12.6 times multiple, because we are not getting growth rate in this earnings. So it is better to pay 25.6 times for ICRA and get an 11.9% growth rate in this earnings and recover the money much faster than paying 12.6 times for CARE ratings and getting a very low growth rate in that earnings. In this chart, we are again looking at the price earning but projection of profit growth rate in the recent 3 years. So previous chart we saw projection growth rate in 5 years. Now we are looking at the projection growth rate in the recent 3 years. CRISIL, we paid 26.8 times multiple and the growth in profit or earnings was 9.9%. That's a PEG of 2.7. Again a very high value. ICRA's PEG is 1.9, very near to the benchmark of 1.5. But CARE rating was again a very high multiple of 2.5 PEG. 12.6 times was the price earning, but the growth rate in the earnings was 5% since last 3 years. So it is much better to pay 25.6 times for ICRA and get a good growth in profit rather than paying 12.6 times for CARE rating and not getting any growth rate in this earnings or getting a low growth rate in this earnings. Like profit growth rate, we are looking for sales growth rate as well in last 5 years and 3 years. So here too we want the sales to be growing at least 10% every year since 5 years back and since 3 years back. That's a projection growth rate or a benchmark that I've kept for my companies. We can also use the averages of all these 3 companies. CRISIL growing its sales since last 5 years compounded at the rate of 9.5%, quite near to the benchmark of 10. And in the recent 3 years, the sales growth has slowed down to 8.2%. So we want the sales to be growing as high as possible, because sales is the starting point from where it trickles down into net profit. ICRA's 5 years growth rate was low at 3%, whereas in the recent 3 years it has turned negative minus 1.3, meaning where the sales was 3 years back, from there it has dropped by 1.3% compounded over 3 years. So the sales has fallen even where it was 3 years back. So this is not a good sign. We want our companies to be growing in their sales as well as in their profits. CARE rating growing its sales over a period of 5 years at the rate of 6.3%, whereas in the recent 3 years it has slowed down to 4.5%, a low value for all of these 3 companies. Next, let us look at the return on equity of the last 5 years on average and as well as 2019. This is the net profit that is generated on the shareholders' equity. CRISIL has managed a very high ROEs over the last 5 years of 31.5%. In 2019, it further increased above its average to 33%. So a very good and high ROEs. ICRA managed a 15.8% average ROE, as well as in 2019 it was 16%, again slightly above average. Here my benchmark is 15% minimum ROE or above that. And CARE rating has managed a 28.3% return on equity in last 5 years, and in 2019 it was 24.6% on shareholders' money. So all of these companies are generating a good amount of profits on the shareholders' equity. The averages of these 3 companies can also be taken as a benchmark. So the average of these 3 companies for the last 5 years was around 25.2%, and in 2019 it was 24.5%. So in terms of ROE, only CRISIL and CARE ratings have managed above average ratings. Next, let us look at the EBIT these companies are generating on the fixed assets and working capital of the company over the 5 years as well as in 2019. CRISIL has given a return on assets of 44.8% over the last 5 years on average, a very high ROA of 44.8%. In fact, even in 2019, the ROA was around 45.5%. ICRA's ROA was around 23.9% for 5 years and 23.5% for 2019. Again, a healthy ROA for all of these three companies. CARE Ratings ROA was 41.1% since last 5 years, and in 2019 it decreased slightly to around 36%. Now most of these companies are basically into service industry. That is, they provide services and the investment in assets as such is very low. Therefore, the profits when compared to the assets employed will be always very high. In this chart, we are looking at the net profit earned on the sources of funds. That is, the net worth plus the total borrowings over the last 5 years and in 2019 as well. CRISIL has managed a good ROCE of 30.8% since last 5 years and 32.4% in 2019. So we can see that ROE, ROA as well as ROCE is very high for CRISIL in all the three graphs. ICRA's ROCE was 15.3% since last 5 years, and in 2019 it increased to 15.8%. Return on capital employed is an important ratio to look at because it compares the entire sources of fund against the profit generated. CARE Rating has managed a good and healthy ROCE of 27.9% on average since last 5 years. In 2019 it was around 23.6%. And when we look at the averages of these three companies, it is CRISIL and CARE Ratings which are above the averages. Next, let us look at the sales turnover on the total capital employed in the latest year. How many times more is the sales compared to the capital employed into the business? Here again, the capital employed is the net worth plus the borrowings. So we want the sales to be as high as possible against the capital employed. CRISIL's total capital employed into the business was 1,152 CR. This is the equity plus the borrowings. On that, it managed to generate revenue of 1,748 CR. That's a 1.5 times multiple, meaning sales was 1.5 times higher than the capital employed. This is a good sign. We want the sales to be as high as possible. ICRA, on the other hand, has lower revenue compared to the capital employed into the business. In fact, CARE Rating too has managed lower sales when compared to the capital employed into the business. In this chart, we are trying to understand the conversion of net profit into cash, whether the company has received cash for the profit shown in the P&L account over the last 5 years. CRISIL over the last 5 years had earned a total profit of 1,464 CR. Against that, it has received 1,483 in cash. So meaning all the profit that the company has shown has got converted into cash. That's a 1% above its net profit. ICRA, on the other hand, has seen a 17% shortfall in its cash earnings against the profit declared. The company's profits for 5 years was 415 CR, against which it managed to receive cash from operations of only 344 CR. CARE Rating also has seen a shortfall of 15% below its 5 years net profit. So we want the cash coming in to be more than the profit declared, meaning all the profits that the company has shown has to be received in cash. In continuation, in this chart, we are trying to understand the cash that came in through operations, how much was used in buying assets and how much is left over as free cash, which can be utilized in the financing activity. CRISIL cash came in over the last 5 years was 1,483 CR. Of that, the company's total free cash was 1,350, meaning most of this cash is still intact with the company, and a minor 9% was invested in buying assets. ICRA too has invested very low 5% in assets of the cash earned in 5 years, and same goes for CARE Ratings. at 8% of 575 cash. So we don't want our companies to invest a huge portion of the cash earned into buying assets and not leaving anything for distribution to the shareholders as dividend or buyback or bonus or maybe repayment of loans in the financing activity. In this chart, again in continuation to the previous ones, we are trying to understand whether the free cash flow that the companies have has that been increasing on average basis or when compared with its 5 and 3 years. CRISIL since last 5 years on average was generating a free cash of 270 CR. In the recent 3 years it increased further to 287 and in 2019 it went up to 347 CR. So this is a good increment in the free cash flow generation of a company. We want our companies to generate as much free cash as possible, that which can again be utilized in its growth in future years if it wants to do acquisition or give bonus or buyback. ICRA has also seen a growth in its free cash for all the 3 periods from 65 CR on average since last 5 years to 68 CR on average in the recent 3 years to 81 CR in 2019. CAR rating on the other hand has seen a decrease in its free cash flow holding from 106 CR on average since last 5 years to 111 to 82 CR in 2019. So CAR ratings free cash generation is decreasing over the period. Like we saw how the companies have managed to convert net profit into cash in 5 years, in this chart we are trying to understand how that happened in 2019. CRISIL net profit in 2019 was 360 CR and the company received almost all of it in cash at 379 CR. That's a 5% above its profit declared. ICRA and CAR rating on the other hand have seen a fall from its net profit declared in 2019. ICRA's profit was 104 CR and the cash coming in was a shortfall of 22%. CAR ratings cash coming in was just 109 CR against the profit of 137 CR. That's a 21% shortfall. So we should be looking at something like what CRISIL is showing in terms of almost all of the profit getting converted into cash. In this chart we are looking at the profit of the 12 months and how it can be compared with its 5 years average profit after tax value. CRISIL on average was earning around 293 CR since 5 years and in the recent 12 months it has generated 347 CR of net profit, which is like 19% above its 5 years average. So this is a good sign. In fact, ICRA too has managed a 19% above average profit after tax in the recent 12 months. CAR rating has seen a 17% below average generation of profit. So we want the profit after tax of the recent 12 months to be as high as and as much above its 5 years average as possible. In this chart we are looking at the growth rate in profit year on year, that is from 2018 to 2019. How has the profit increased? CRISIL has seen an increase in its profit from 2018 to 2019 from 294 CR to 360 CR. That's a 22% gain in its net profit from year to year. ICRA has seen an 8% gain in its profit, whereas CAR rating has seen a 15% fall from 2018. In 2018, the profit was 161 CR, whereas in 2019 it decreased to 137 CR. Just like we saw 5 years data and the latest 2019 data, here we are trying to understand what is the very near-term picture of these companies in terms of quarterly analysis of sales and profit. CRISIL, in fact, all of these companies, if you notice, have seen some kind of margin pressure as well as drop in sales over its previous quarter. CRISIL sales have dropped by 5% over its June 2018 quarter, whereas profits have fallen by 13% from June 2018 quarter. So from June 18 to June 19, there has been some kind of margin pressures as well as drop in revenue own for all of these companies. ICRA has dropped 2% in sales, whereas 20% in its net profit. CARE Rating has seen the worst in terms of its sales dropping 17% and profit dropping 47%. Next, let us look at the size of this company in terms of net worth or actual value, not the market value, but the book value of the company, and what is the contingent liability of these companies when compared to the net worth. Net worth is the book value, which I've already explained when we analyze the price to book value ratio. Contingent liability are those liabilities which may or may not occur, and they are contingent or dependent on certain scenarios or situations which may happen in the future. One more thing to understand about contingent liability is that these liabilities are not declared in the balance sheet. So these liabilities can always create a risk for our investments. CRISIL total net worth was 1100 CR. This is the value of the company when it pays off all its liabilities by selling all its assets. ICRA was 638 CR and CARE Rating was available at 529 CR of net worth. These are the net worth or actual values of these companies. Against that, all of these three companies' contingent liability is very low. CRISIL's contingent liability is just 6%, ICRA's 4%, and CARE Ratings is nominal 1 CR of contingent liability. So all of these ratios are good. Next, let us look at the debt to equity ratio. That is how much debt burden these companies have against the equity contribution. All of these three companies are debt-free companies, so there is nothing to analyze in this. But we'll just look at the equity portion. What is the equity in all of these companies? CRISIL's equity is around 1149. This is as good as the net worth that we saw earlier in the previous chart. Again, in this too, we are just trying to understand what was the debt position 3 years back and how the debt burden is in the latest year. As we saw, all of these companies are debt free. CRISIL just had a 3 CR of debt, but that's a very nominal. In terms of debt to profit ratio, we are trying to understand how much is the borrowing and what is the profit generated in 2019. As we saw earlier, all of these companies are debt free, so these companies' profits are good enough to pay off, if any, debt on these companies. Only CRISIL had a debt of 3 CR, whereas its profit was 360 CR in 2019. Very minimal debt. Next is the interest coverage ratio. Here too, these ratios will be very high because the company's debt as such is very low and the interest cost would be negligible. CRISIL's EBIT or earnings before interest and tax was 498 CR and the interest burden in 2019 was just 2 CR. So that's a very high multiple of 436, meaning the EBIT or the top line profit or the operating profit was 436 times higher than the interest cost. This does not make sense because anyways the debt burden is very low. So we'll give this also a skip. These are all good ratios. So we want the interest coverage ratio to be as high as possible. Next is the promoter holding and pledged shares, if any. As we can see, none of these companies have pledged any of their shares. And CRISIL's promoter holds 67%, ICRA's promoter are holding around 52%. CARE Ratings as such has no promoters in them because most of the holdings are by FIIs. So all of these ratios are again good. Since these companies are in service industry, as such they wouldn't have any raw material cost. So we can give a skip to these companies. And we can just look at the sales these companies have done in 2019. The highest revenue generated was by CRISIL at 1748 CR. ICRA generated 328 and CARE Rating generated around 319 CR of revenue in 2019. Next, let us look at debtors to sales. Debtors are customers from whom the company has to collect payment for which they may have given service in the past. CRISIL had to collect around 303 CR from its customers in 2019 against the sales done of 1748 CR in 2019. That's just a 17.6% of collection pending from its customers. I don't want the company's collection to exceed 30% of the current year's sales. That would put pressure on the working capital requirements. ICRA total debtors were around 10.4% of the current year's sales, a low value. Even CAD Rating has managed to keep its debtors at around 15.3% of its sales. Next, let us look at how fast these companies are collecting payment from their customers. CRISIL was collecting within 59 days in 2019, and 3 years back it was collecting within around 52 days from its customers. So a good value. I want my companies to efficiently collect payment from their customers within a stipulated time. My benchmark as such is 90 days. That is, the collection should not go above 90 days or 3 months. ICRA's collection is around 38 days and has become much efficient. 3 years back it was collecting in 51 days and now it has reduced to 38 days. So this is a very good value. CAD Rating has increased from 31 days 3 years back to 54 days in 2019. Now many of these companies need to provide more credit days if there is a economic pressure or overall pressure on the company to generate higher sales. Next, let us look at the debtors to creditors ratio, meaning how much it has to collect from its customers and how much it has to pay to its suppliers. CRISIL's total collection from customers was 303 CR, whereas it had to pay 71 CR to its own suppliers. That's a ratio of around 0.2 times, which is a good value. If the debtors and creditors are similar, then that's the best thing. That is a ratio of 1. ICRA's collection from customers was 34 CR, whereas it had to pay 11 CR to its own suppliers. CAD Ratings has nothing to pay to its suppliers but has to collect around 47 CR from its customers. So overall the ratio is okay. In this chart, we are trying to understand the average operating profit margin of the last 5 years, which has to be above 15%, and the net profit margin of 2019 as well as 2018. So this will give us the return ratio or profitability ratio of these companies. CRISIL has managed a 28.4% of the top line profit. Since these companies don't have major expenses, most of their top line revenue gets converted into operating profit. Its NPM2 was high at around 20.8%. My benchmark for NPM is around 15%. In 2018, it managed an 18.4% of NPM. Again, a good value. In fact, all of these companies are generating a huge OPM as well as NPM for all the 2 years. In fact, all of these companies are generating a good operating profit margin as well as net profit margin. CAD Rating had the highest OPM of 60.9% and a 43.1% of net profit margin. So then we have to ask a question. Why has the prices fallen 50 to 60% for CAD Rating if it's generating so much profits? Next is the current ratio and the working capital requirements. We are trying to understand if the company can easily pay off its current liabilities using its current assets, meaning those liabilities which it has to clear in the current year using the current assets it owns. CRISIL's current assets were 831 CR and its liabilities to pay was 453. That is an excess working capital of 378. A 1.8 times multiple in terms of current ratio. So we want the assets to be more than the liability and a good liquidity position overall. ICRA's liquidity position was the highest at 3.9 times. CAD Rating was also comfortable at 1.6 times, meaning its assets were enough to pay the current liabilities. Next, we are looking at the total assets of these companies. What is the asset base and how much of that asset has already been depreciated to the P&L account and how much needs to go to the P&L account in the future years. So that will give us an idea as to what kind of margin pressure on the profit will be there by way of depreciation. CRISIL total assets were 497 CR and 147 has already been depreciated over the past years. That is a 30% depreciation, accumulated depreciation. ICRA accumulated depreciation is around 35%. a good value. Any value which is as high as possible is a good sign that the company has almost transferred all of its depreciation in the P&L account. CARE ratings accumulated depreciation is very low at 10%, meaning after this 92 CR of gross block or gross assets or total assets, only 9 CR has got transferred to the P&L account. So almost 90 CR needs to go to the P&L account in the future years. In this next chart, we are trying to understand the net block or the net assets of the company. This is the asset it owns after removing the accumulated depreciation from the gross assets or total assets. And what is the depreciation rate being charged on this assets? CRISIL's total net block as of now is 353 CR in 2019. On that, every year approximately it will be transferring around 43 CR. That's a 12% depreciation rate. ICRA's depreciation rate was also high at 17%. So we want the depreciation rate to be as high as possible so that there is no manipulation going on into the business. CARE rating on the other hand is transferring just 4% as depreciation to its P&L account, a very low value. Now why it is transferring at such a low rate needs to be investigated. Since these companies are service oriented, they don't have any inventory, and therefore we can give this also a skip. So this concludes my analysis of these graphs. Let us move back to the Excel sheet and give it a score and rank all of these companies so that we can understand which companies we can invest in. So I have given score to all of these companies from +3 to -3. Since we have only 3 companies, the highest rank was received by CRISIL at 82 points. ICRA received 75 and CARE received 77. So almost all of these companies are very nearby to each other. What we need to understand is which is the most efficient company of the 3. What is the highest growth, which company has the highest growth rate in terms of sales and profits, which companies are generating highest returns, which company has a good cash flow generation, and finally which company is available at a good valuation, so that if we want to buy we can decide using the valuation matrix. So I'll be leaving this screen on for a few seconds each so that any person who wants to understand or note down the values can do so. And then finally we'll look at the matrix and give a final score to all of these companies. To note down these values, you can pause the video and check out the numbers and the scoring method. Okay, so I have arranged all of these companies into different metrics and I've given weightages according to which metric I feel is the most important. For me, efficiency is very important and it covers these many ratios. Cash flow metric is the second highest weightage and looks at how the profits are getting converted into cash. Growth metric looks at how the sales and profits are growing over different periods. Return metrics looks at the profitability on the assets, on the equity and capital employed and so on. Solvency ratio looks at the promoter shareholding, pledge of promoters and current ratio. Valuation metrics looks at the price and where the price is compared to different variables like earnings, OCF, operating cash flow, free cash flow, book value, sales and so on. So after giving scores to all of these companies and creating a weightage system, ICRA in terms of efficiency was the highest at 108 points. CRISIL was lowest at 78 and CARE rating was at 102. In terms of cash flow, CRISIL managed to convert most of its profit into cash and has got the highest value of 35. ICRA's cash conversion was the lowest and has got the negative value. In fact, CARE rating 2 has got 0 value. So in terms of converting profits into cash, CRISIL is the best. Again, growth wise, CRISIL has done the best, scoring 48 points. In fact, CARE has received a -12 points and ICRA has received 36 points. In terms of return metrics or profitability metrics, we see that CAD rating has got the highest profits and CRISIL has got the second highest. Solvency wise, CRISIL and ICRA both are doing well, but CAD rating has got a low value of 6 points. In terms of valuation, CRISIL is the most expensive and has received the lowest points, whereas CAD rating has got the lowest valuation as such and has got the highest points. So when we total all these numbers together, we see that even though efficiency wise CRISIL is low, overall it has got the first rank, that is the highest points. ICRA has got the second highest points at 230 and CAD rating has got the lowest at 216. So if I have to invest in any of these companies, it would be either CRISIL or ICRA, and I would generally avoid CAD rating because it has got negative in its growth metric as well as 0 in its cash flow metrics. So this concludes my analysis of the credit rating agencies. Thank you for watching this video.